Thank you, all attendees, to this event organized by PKF Mexico and PKF Singapore, where we will discuss about impact of BEPS action in Mexico and Singapore, but also with comments on the global environment. Today, we have an outstanding speaker with us, Sahil Seth. Sahil Seth is a director of transfer pricing in our member firm, PKF Singapore. Welcome, Sahil, to this event, and thank you very much for being here with us. With
Hello,
you
Jimmy.
will be also I will be also with you, Jimmy Cruz, the partner in charge of transfer pricing in PKF Mexico. So welcome very much, Sahil, and please start with your presentation.
Yeah, sure. Yeah, thank you so much, Jimmy. Thank you, PKF Jalisco, Carlos, and everyone from PKF Mexico for putting in this place, this webinar. Thank you so much for your support and cooperation. And greetings to all who are attending the webinar. Thank you so much for taking out your time, and we appreciate the same. So, as Jimmy has already said, the context of the webinar, we would be in brief discussing the impact of BEPS actions. So BEPS would be standing for base erosion and profit shifting, issued by the OECD, that is the global body for organization for economic cooperation and development. So we would be discussing a brief impact of the different actions accumulatively on both Singapore and Mexico, and what would be the implications for taxpayers in these countries. So can we move to the next slide, please? Thank you. Yeah. So as I mentioned, the BEPS actions have been issued by the OECD in 2013, and there are around 15 BEPS actions. They cover different topics and different avenues for not only for transfer pricing but also for taxation. But right now we are primarily focusing on transfer pricing. So, a cumulative impact of the BEPS action plans have led to certain revisions in the current transfer pricing regulations or guidelines of Singapore. So they keep on updating, every year or every 2 years. Recently, as mentioned on the slide, they have been updated in the month of June this year, and now we have the seventh edition in place. Uh, Throughout all the amendments and updates, the guidelines are always taking cue and reference and guidance from the OECD guidelines and the action plans. Uh, the most important and the significant point to note is that the updated guidelines are now laying greater emphasis and uh, much more importance on the importance of determination of arm's length principle, which is very commonly known as impact and transfer pricing. So it's very important now for companies operating in Singapore to ensure that all their transactions would mean both domestic and cross-border, are fully compliant with the arm's length principle, as this primary requirement is not subject to any thresholds or any revenue numbers or anything. So this is the most important and significant change, that all the transactions of the taxpayers duly need to comply with the arm's length standards. Uh, so the local tax authority in Singapore is known as the Inland Revenue Authority of Singapore, or IRAS, as in the abbreviated form. So they have been applying the internationally accepted principles and standards issued by the OECD, uh, and they are again wanting that all the transactions are fully compliant, with the local standards in Singapore plus the OECD, because the BEPS actions have a lot of importance on different countries, whether it's Asia or various across regions. So the importance now, it is much more significant, because if the taxpayers are not complying with this principle, the local authorities have an right or have an authority to determine their own pricing policy. So if I take for a very simple example, if any taxpayer in Singapore is operating maybe at a cost plus markup of maybe 5% or 7%, but there isn't any proper analysis to support it. then the authorities can come up with their own analysis and they can say that no, the markup should be more than 7 or 5 or 10, whatever. So that is a quite important factor while preparing your transfer pricing, policies and analysis and documentation, etc. So that's the most important point. Uh, in Singapore, the documentation or a local file, which is commonly known as, it is generally segregated into two parts, full-fledged and a simplified documentation. I'll explain in a brief what is the difference between these two, but it's primarily full-fledged and simplified. And both of them have to be, prepared or maintained by the taxpayer by the filing return due date of the tax return. It has not to be filed unless and until the authorities, specifically requests for a copy. But it's important to prepare and maintain it before the tax return filing due date, so that it is ensured that it is contemporaneous in nature. That is, it has been prepared before the tax return filing due date. So this is the overall, BEPS impact on Singapore for documentation or local file. Because in Singapore we have, so the actions of BEPS on transfer pricing are generally divided into three parts: master file, a local file, and a country by country report. So in Singapore we have the rules for country by country report, which I'll just explain, and local file, which is this documentation. There are no separate rules for master file, but when the taxpayer is preparing a report, the contents of a master file also need to be mentioned in the local file. So that's the overall, sum and substance. So can we move on to the next one? Thank you. So as I mentioned, primarily the local files are divided into full-fledged or a local file or a simplified transfer pricing or a TP documentation. Uh, so what primarily the difference is that for a full-fledged documentation, companies whose revenue is less than 10 million, uh, they need to prepare a overall, transfer pricing report, and it has to be a full-fledged version. For companies whose revenue is less than 10 million, right, but their transactions are breaching the required thresholds. For the required thresholds for the transactions, it's 1 million for services transactions, and around 15 million for sale and purchase of goods, etc., etc. So if the transactions thresholds are being met, but the revenue is less than 10 million, then the company needs to prepare a simplified version. And if it's exceeding 10 million, and if the transaction thresholds are being met, then of course it has to prepare a full-fledged documentation. So that's the main, difference. Apart from these two requirements, depends upon the applicability. There is an additional reporting requirement in Singapore, uh, that taxpayers with an aggregated, value of their overall related party transactions of more than 15 million Sing dollars, they need to prepare and complete a RPT or a related party transactions form also, which has to be filed with their tax return. So now, if you see, this additional reporting requirement has been in place for quite some time. The only difference is that earlier it was being filed separately. Now it is being filed with the corporate income tax return. So that's the main, difference. But from a compliance perspective, it's either a full-fledged report if your revenue exceeds 10 million, or a simplified report if your revenue is less than 10 million. But this will be applicable for both domestic and cross-border transactions. Yeah, so can we move to the next slide? Sure. So apart from the transfer pricing documentation or local file, and the additional, reporting requirement of the RPT form, as I mentioned earlier, there is another small requirement, but it's quite important as of now, which is known as the country by country, reporting requirements. So this is primarily a financial blueprint or a financial overview of the entire group, because it talks about, different fields, like what is the profitability of the group of various entities, what is the accumulated earnings, the stated capital, the tax rate applicable or the effective tax rate applicable, and headcount, etc., etc. So it's a standard template. So with effect from financial year beginning, on after 1st of January 2022, Now Singapore entities who have to file the CBCR, they also need to prepare a notification requirement. So the thresholds for a country by country report in Singapore is Singapore dollars 1,125 million Sing dollars, which is more or less similar to the global OECD threshold of euro 750 million. So this is just no for the information that any company or taxpayer whose consolidated revenue is exceeding this threshold, they need to file the country by country report requirement. And apart from that, the notification will also apply for Singapore headquartered M&E groups or multinational enterprise. The only small benefit to the taxpayer is that the notification requirement will not apply if the Singapore entity is not a reporting entity of the Singapore group or it is a part of a foreign group, right? But why it is now much more important for a group for CBCR is the last mention which I have mentioned in the slide, that with the global minimum tax, I think you might be aware of the BEPS 2.0 planning or global minimum tax, which is the implementation of minimum effective tax rate of 15% across the entire countries across the globe. So with this global minimum tax coming into picture, in Singapore, it will be coming from 1st of January 2025. Uh, there would be a lot of information that would be analyzed in accordance with the CBCR, because as I mentioned, it's a financial overview or a financial blueprint. So with global minimum tax rules coming into picture, CBCR and the interplay of minimum tax and CBCR will go hand in hand. So that's why it's now much more importance for companies not only to comply with the standard transfer pricing report and all, also to comply with the CBCR and also to have an impact assessment or analysis for global minimum tax to ensure that whatever effective tax rates are applicable in their jurisdiction, respective jurisdiction, is consistent across the group, and thereafter analyze the impact of global minimum tax wherever they are not meeting the minimum effective tax rate of 15%. So these are the most key important implications for the BEPS action plans for Singapore. And now I'll leave the floor back to Jimmy.
Thank you very much, Sahil, for this very interesting presentation. So please, let's move to the next slide, where I will explain briefly about the threshold, and the threshold for Mexican companies or Mexican taxpayers operating in our country. They are required to prepare and submit a local file, always that they have revenues of 52 million US dollars or more. To have to submit this local report, the taxpayers they will need to do so disregarding if they are conducting transactions within Mexico or also with foreign companies. So for the master file, the companies or the groups, multinational groups, are also required to submit this master file declaration, always that they have the same conditions for the local file taxpayers, but with intercompany transactions abroad. I mean, which means that the master file needs to be submitted always that the company is part of a multinational group. For the country by country reporting, the Mexican group will need to submit that declaration if they have revenues exceeding 621 million US dollars. But then what is every declaration and what we do with respect to these reports, we can see next slide, okay, how we normally diagnose the intercompany or the multinational groups to submit either the local report, the master file, or the country by country. So to diagnose whether a company needs to submit the local file, the master file, and the country by country under the BEPS Action 13, we prepare a comprehensive questionnaire that cover various aspects of the company's operations, organizational structure, and financial details. So we cover by this diagnostic the general information such as the company name, the tax ID, the country of incorporation, the primary business activities, the fiscal year under analysis, okay? And we also go to the detail of the organizational structure of the group revenues and thresholds, the transfer pricing policies, the transactional information, and of course also we look for the local file requirements in Mexico, the master file, and the country by country requirements as established in next slide. For the local report in Mexico, we normally have to prepare and submit the local entity information, as I said before, okay? And also the structure and the organizational chart. Also, it is required to have the value chain and the key competitors to see where the company is located along the value chain and to characterize properly not only the company, but also the intercompany transactions. Okay, we also need information on the operations and transactions with related parties and the description, detailed description of the transfer pricing policies, the development and the use of intangibles, and also, of course, the functions and the risks assumed. It is very important for the companies to have the intercompany agreements, okay, detailing the transfer pricing methods and the selection and rejection standards and screening process. We also need to submit and to prepare for purposes of this report the financial information of the taxpayer, okay, and the financial data of the local entity as well as the related parties. In the next slide, we will see generally the master file information contained in the master file report, okay? So the taxpayers need to submit the organizational structure and the financial information such as a legal ownership structure, okay, along with location of the operating entities. And also they need to submit the information on the financial activities of the group as well as the financial and fiscal position. We also need to submit general description of the business activity, okay, such as the description of the business model, the value generators, the supply chain, the geographic markets, and the risk and business restructuring transactions, in case they have performed a restructuring in the year of analysis. We also need the list of and description of the relevant aspects of the intergroup services and the agreements. It is also very important to stress that for the master file report, the multinational groups, we also need to prepare and to submit information about the intangibles, okay? Intangibles such as the description of the development and use of any trademark, know-how, or any other intangible, the transfer pricing policies for research and development, okay, and the rights between the related parties. We also need to stress and to emphasize on the intragroup agreements on the use of intangibles, the intercompany TP policies on intangibles and research and developments, And we also need to stress any other intangibles made during the fiscal year, created or used within the international group. As for the country by country report, it's a more complete report, okay? So we need to submit all the information contained in the master file, but also general information about the fiscal and financial uh, of the group companies. As I normally explain to my clients, the BEPS declarations are like a glass box where the information is transparent for all the taxpayers and for all the tax authorities, right? So we need to submit and prepare detailed information, okay, for the country by country report, such as the revenues, the accumulated earnings, the number of employees, the net book value of inventories and tangible assets. But we also need to have at hand the income tax paid and accrued, the stated capital, the business names of the legal entities resident in each fiscal jurisdiction, and the relevant additional information. Along the years, the reports obligation started in Mexico in 2016. So the very first reports were submitted in 2017. So we have gained extensive experience in declarations, in local master file, and country by country report for various multinational companies, okay, in different industries, such as companies in the food industry, okay, companies in the manufacturing sector, companies in the specialized in commodities, and some also public or listed companies in the wood production sector. We have also worked with technology companies located in the 5 continents, and we have had the experience to work with multinational groups in Mexico, Canada, also Latin America, Europe, and Asia Pacific. And here I would like to also give the microphone to Sahil, so for him to comment about the experience, his personal and the experience of the firm in Singapore
Yeah,
with local master file and country by country reports.
yeah. Thank you, Jimmy. So, yeah. So, from a Singapore perspective, we are also been assisting many of our clients apart from the transfer pricing uh, local file, whether it's a full-fledged version or a simplified version, as I explained earlier in my presentation. And apart from that, and across different industries, whether it's manufacturing, consumer services, automobiles, and financial sector. So apart from the local file, wherein we are also doing not only the compliance but also the review part, we have also been assisting many of our clients in different industries across reviewing their intercompany transfer pricing policies, suggesting the red flags, whether it's a value chain alignment or value chain transformation, suggesting the transfer pricing proper business model as that is in terms of a supply chain analysis or a value chain analysis. And from a country by country reporting, we are also having a lot of experience in uh, either preparing or reviewing the CBCR or the country by country and highlighting the red flags. So one of the example, if I can explain, would be that one of our group, when we were reviewing the CBCR, we could see in one of the jurisdictions there was a high amount of revenue being generated, but the tax rate was much below. Not even minimum 15%, it was in the range of around 5 to 6%. So those are some of the red flags which we highlight to different taxpayers, because from a CBCR perspective, that is, and from a BEPS perspective, it's important to analyze the information being mentioned in the CBCR, not only from the local entity perspective, but from an overall, group perspective. So these are some of the critical avenues in terms of reviewing and suggesting the policy for the group, because from now onwards, or I would say maybe 5 years before, the overall experience of BEPS in terms of compliance for groups has now changed from only complying with the local entity requirement to the other side of the border also. So now it's all about maintaining proper consistency in the policies and the results which are being mentioned. So these are some of the experiences which we are having, and this becomes much more important for groups operating in different regions, to ensure whatever pricing policies you are having and models, they are consistent across the group. Yeah, thank you, Jimmy.
Yeah, very good. Very good. I only want to ask about the local file, the country by country, and the master file report. Just to say that taxpayers should be ready to have the local reports, either the master file or the CBC as they need it. These three reports aim to provide the tax authorities with a clear understanding of the transfer pricing policies of the multinational enterprise group and allow them also to assess potential risks of
Yeah,
BEPS, of base erosion and profit shifting. So
right,
in general terms, I would say that, and you may probably agree with me, that the BEPS actions, especially the action 13, has increased the quality of the documentation that the companies that they need to have at hand and they need to prepare. So they should
right,
be more careful to have the detailed documentation supporting every intercompany transaction, right?
right. Absolutely. Yeah, that is spot on, because now, uh, apart from, as you rightly mentioned, from the BEPS Action Plan 13, it has been a laid increased emphasis, and what we are also being witnessing over the past, I would say, maybe a decade, that the kind of transfer pricing scrutinies, audits, and the kind of questions being asked by the authorities are have slightly increased, and they are not only just ranging that whether you have a proper local file or a master file or a CBCR in place, as and what is the basis of preparing the same. So the basis now here is very much important, which can be a proper a benchmarking analysis or any other kind of analysis. So yeah, as you rightly mentioned, BEPS Action Plan 13 specifically has laid a greater emphasis now, and going forward, once we have the Pillar 2 also provisions in place, it will lead much more importance for taxpayers that your current policy and your future policies are absolutely in line and consistent across the group.
And consistency is a very, very important point, as the BEPS introduce a standardized three-tiered approach
Yeah,
for transfer pricing documentation, right? So this
right,
ensures the multinational companies to provide consistent, as you say, very well, detailed information about their transactions and the financial activities across different jurisdictions, right?
right,
So
right.
that improve or that needs to improve the quality of the documentation, right?
Correct,
So the BEPS framework in general encourages more robust, detailed, and consistent documentation, which helps the tax authorities to better assess whether transactions are conducted at arm's length, and
right,
this also improves the documentation of the multinational companies, reducing the risk and disputes of adjustments, okay, during audits. So
right.
in conclusion, as a takeaway, we should stress that the BEPS has raised the bar for compliance and transparency, okay, improving both the quality of transfer pricing documentation and also limiting the avoidance opportunities or limiting the avoidance of taxes for multinational groups.
Correct, absolutely. And maybe just one last point from my end is that from an overall, group uh, perspective, uh, transfer pricing, can definitely assist companies not only to meet the compliance, I mean, that is there, but from an operational and a cost efficiency point of view, that if the group has a proper policy in place and the documentations in place, many of the countries, across the different regions, whether it's America or Asia or wherever, they do, give the flexibilities to taxpayers to, if there is no changes in their business transactions or no activities, they can do a refreshes in the next 2 years, and then the cycle moves on. So, uh, obviously, it's an annual exercise, because this is one question which I do often hear, from clients, and whether this is just a one-time exercise or it's an annual. So it's an annual exercise, but if it is being done in the first year, with a proper analysis, and in the next 2 years there aren't any changes, then you can just do a simple update, and then you move on to the next, no, next year, and then after again the 2 years. So this life cycle or this time cycle keeps on like this. But the importance of having a proper,
Yeah, I think Sahil. Okay, so we will open the microphones if to the audience if there is any comment or
yes,
question.
local stuff. Yeah,
Yeah, Sahil, can you hear us?
yeah.
Okay. Sorry, I missed you for a moment, but I was saying that, yeah, we are open
Hmm.
to receive any comment or question from the audience. You can follow us also in our social networks. Uh, okay, for Sahil said in LinkedIn, and Jimmy Cruz, we are in LinkedIn. And a big thank you to all of you who joined this webinar about the impact of BEPS actions. Your participation and engagement are truly appreciated. It is fantastic to have attendees from different countries come together to discuss such an important topic in the business world. Thanks again for being part of this webinar, and we look forward to connecting with you again soon at our future PKF events. Thank you very much, Sahil. Thank you
Thank
very
you,
much to the
everyone.
organizers.
Thank you, Jimmy, and thank you, everyone.
Thank you, everyone.